What's up, YouTube? My name is Deshaun, and today I'm going to be teaching you guys the basics of charting, which include support and resistance. And I'm going to show you guys a few of my favorite patterns, breakout patterns to use. All right, so when you first start, you want to put it on the 3 year, 1 week. That's what I like to do. This is all the preference. It just depends on how you trade. But whenever I do the resistances and support, I start off on the 3 year, 1 week. So what you want to do next is find the lowest point, which is right here around, what's that, 36.75. You want to plot that horizontal price line, and the way you even get that is using the price level right here. And I would just want to say this platform that I'm using right now is Thinkorswim, TD Ameritrade, but there are other platforms that you can use to trade and chart on, such as TradingView to chart, Webull, Robinhood, Tastyworks, those are all other platforms to trade off of, which you can also chart off of as well online, like when you're using desktop version. So this is not the only one, but this is just the one I prefer to use. So then next you want to go for the high, which was 59.27, right? So I'm gonna right click, edit properties. I'm gonna type in 59.27. Okay. So then you want to make it go to the left. You don't have to do that. I just do that so it's a clean, straight horizontal line, and it's not like you just plotted it right in the middle of the chart. After that, what you want to do is find the next support. So as you see, it bounced off of that 36.75, but it also bounced right back off of that 59.27. Instead of falling all the way back down to the 36 level, it held this level right here around 48.23. So you want to go type that in, 48.23. Extend it to the left. There you go. All right, so now you have all of your supports and resistances at the bottom level. So now we were going to move to the top where it's at right now. So you want to plot one at 87.29. Make that go to the left. Then you want to plot right here because it held, although it went up to here, it dropped back. It didn't go all the way down back to 59, right? So this is a new support level right here at 76.1. So you want to plot that, edit 76.10. Cool. Next, extend it to the left. All right, cool. So now we have all of our supports and resistances that are important right here on the weekly chart. As you can see on this one, it looks different. It has like these other lines, these colorful lines. What these are is moving averages. Let me change it to the trend line. These are called moving averages, and I'm gonna just go over them right quick. I have the 200, the red one is the 90, the purple one is the 21, the silver one, let me zoom in a little bit more. The silver one is the 50, and then this one is also a 21, but it's a exponential average, 21, moving average. So I'll go over that in another video about all the moving averages and how they work. But today we're just learning about the basics of charting. So let's move on. So next you want to go to the 1 year, 1 day. And why you do that is you want to start at the highest and just work your way back down backwards. Reverse engineering your chart to where you have all the important support and resistances drawn. So you have nothing else to draw. You just have to watch really. So after that you can see these empty spaces right here. Those are called gaps. And that's where the stock gapped up overnight. So what you can do is plot the resistances and supports of those. So this is support, this is the resistance, resistance, support. Alright, so what you want to do is extend those so it's all one line. Cool. Alright, so now we have all those. So next you want to go look and see if you missed any. And of course, it's past this level of the 64, but it can get back down. I'm not going to say when, I don't know. It may never get back down that far, but it might eventually. So you want to have those lines drawn. So if it ever goes back there, you already have them drawn. So next you want to find some more support and resistances. You would consider this one because it couldn't get over it right here and as well as right here. So you would draw that one, extend it to the left. You can draw support right here because right of this candle. These are daily candles, by the way. So we have a low of 79.12. So we had that one plotted. Let's edit it to make it exact at 79.12. So you extend that one to the left. And now you have majority of your resistances and supports drawn. Let's draw one right here, actually. You can see it's been consolidating, which means it's just been going up and down right there. So we're going to go that way. Alright, so once you have the dailies drawn, you want to move down to the 6 month 4 hour. And then you just want to see if you missed any. So it doesn't really matter about this one as much around the $50 area because I don't think it's gonna go back that low as of right now. So let's just worry about this past month of chart. This past month of the chart. So right here we can draw another support because it bounced right here. What's the low? 68.47. Wait, is that the right one? 67.02. Alright, so you draw one right there. Extend to the left. Cool. So now you see how all these lines are starting to come together. And each resistance and support has a specific spot that the candles like. And when I say the candles like, I don't mean the actual candles, but the people, the way the market works, there has to be buyers and sellers. So they're always going to sell off and it's always going to be bought at a specific point. So what you want to do is have these support and resistances drawn so you know where the people are going to sell and where the people are going to buy. So once you have all those drawn, you can go down. And so basically the 4 hour is mostly for swinging. The 1 day is mostly for swinging as well. And once you start going down lower, like the 1 hour to the 5 minute, that's more of day trades. You can use a 1 minute for swinging as well, but the smaller the time frame, the shorter the time and the trade you're going to be in. So let's zoom in some more, see if we can find some more resistances and supports. So we're going to draw one right here. What's this high? 84.41. Plot that right there. Extend to the left. Alright, so now this is another support, 84.41. I mean resistance, I'm sorry. It's another resistance. So then we're gonna go down to the next frame, the 30 minute, 10-day 30 minute. And so now you see that all these resistances that we have drawn and supports that we have drawn are still working even though it's on a smaller time frame. So it's just more space in between the two of them because we're on a different time frame. So you can draw another one right here because you see it held that for 3 days straight. It didn't go any lower than that. And that's around let's use this one. That's around 81.03. So you want to plot that one, extend to the left. So now you have most of the resistances and supports that you would really need to chart and to trade with. So once you get to like the 5 minute, you see there's one like every $2, every $1. So the stock is going to trade in between those until it breaks out. As you can see, it broke out of here, went down a little bit, but then went right back up to the next resistance off of that support. It bounced off the support and went to the next resistance. Majority of the time, they're just going to bounce back and forth until they break out. So, or they'll just stay in the middle like right here. So when that's the case, you don't want to get in. You just want to wait for it to either go to the resistance and break it or drop to the support and break it. Or it can drop to the support and bounce off. So it all just is a waiting game. Once you draw the resistances and support, you just wait for it to make a move, right? Now I'm gonna show you guys just a few of the patterns that I like to trade off of. There's two right here, but we're gonna go with this one first. This one's called a bull pennant. So the way you would even see this is, all right, this is the pole, this is the pennant. Now I'm gonna chart it so you can see it better. So it goes like this, and then this would be the, like the pole. So you see it went up, it retraced back down to the, so it broke the support. I mean, this resistance first of all. Went up. We would draw a line going across like this to represent the high. This is the highest it went so far this today. So you wouldn't even want to get in until it could break this because it could just go back down right afterwards because you wouldn't you all you see is this. All you see is this if you're looking at it, and you don't know what it's gonna do. So you would see this, you would wait for it to break here. Let's scroll over just a little bit. Boom, so it broke it. So you would have entered like maybe right here or like at the bottom of this candle. It ended up going all the way higher up into this resistance that you already had drawn. So you could have risked that. It would have been like $1 move, but you could have made anywhere from 50 to 1,000 depending on how many contracts you had in options. The second pattern is called a double bottom. So with this one, I'm not gonna draw a whole price thing. I'm gonna go like draw one with the trend line. So with this one, all right. So let me pull it up for you guys right quick. Reversal, double tops and bottoms. All right. So this one, it doesn't show it. This one shows a double top. It's just the opposite of this. So this is a double top, so it makes an M, if you can see it. So it goes up, down, up, down. So a double bottom is going to do the opposite. It's going to go down, up, down, up. So the way you would know to get in here is, all right, so it dropped here, it bounced, went right back to this resistance right here, went back to this support, boom, so it broke through. As soon as it broke through here, you could have gotten in, rode that up. So it went all the way to that high of the day. So let's draw that from here. Actually, let's draw a real price line. So this was 76 76 cent move. You see this is on a 5 minute chart. So this is considered scalping. Um, Short quick plays. I do these as well, but I usually like to do like day trades where it's like the entire day. But this is a representation. I mean, not a representation. This is an example of a pattern I would do. So let's go back on to the 30-minute chart. See if we can find some better. Okay, so this is a big bull flag right here. So let's back out of this. Actually, not. Well, yeah. All right, cool. So you would draw it like this, right? So big flagpole consolidation period. So if you would have gotten in here around what's the price? 81.03 right here, you would have gotten in after it was consolidated. You could have swung that into the next day and it went up a whole dollar. So you could have bounced, then it would have bounced here at the resistance. These are all short-term plays. But let's go to a further out. So let's go to a further out one. All right, so right here is a double top. All right, so with that one, as I've shown, double top, up, down, up, down, up, down. So let me show you with the chart. Up, down, up, down, all the way down to here. So you saw that it went up. It hit this resistance. It held this support right here around 85. Went back up to 87. Once it broke this 85, you would start looking for puts because puts means you're betting that it's going down because this broke through that.
Look at is Square Cash. I'm gonna do a quick one. All the resistances and support. So I'm just gonna go ahead and do all those since you guys saw the tutorial how to do it in the beginning. Put one there, there. Could put one there. And one at 159.47. All right. So now we want to go. Well, hold on. Gotta extend them. Extend all of them. I don't think it's gonna go back to 49. I just did that one. Extend to the left. All right. So then we want to go to the 1 day. All right. As you can see, most of them are already right there. Boom, boom. We could do a resistance right here because for those amount of days, you see, it was 1, 2, 3, 4, 5, 6, 7. 7 days, a whole week, it was stuck right there. All right, so now we want to put the other ones right here. That's resistance right, I mean support right there, support right there. All right, boom. Extend to the left, extend to the left. Okay, so right here, I want to show you guys a few patterns that I see. So we see a double bottom. First of all, like I told you all, double bottom means it goes down. I'm just gonna show you. Goes down, up, down, up. Okay, so it went all the way up to here. You literally could have caught it from right here, or I'll say maybe right here. You know, after it broke through here, you could have got in, and then it's held it for 2 days. It went from 133 all the way to 159, 158 overnight. You know, so like these plays can go crazy. These patterns, they're always gonna. I'm not gonna say always. Like I said, maybe 8 times out of 10 they'll go, but majority of the time they're gonna go. So that's a double bottom. We see, and this is on a daily. So whenever you're on like a bigger time frame, like the daily or the weekly, it's gonna be a big move. And as you can see, big move. We have another pattern here. We have two patterns in one actually, depending on how someone saw it. So let me go down another time frame so it's easier to see. All right, so here we have a cup and handle. So I'm gonna draw the cup. So you can see it. It's just all for visual. All right, so this is your cup and this is your handle. This is called a cup and handle pattern. This is a breakout pattern. Bullish, which means it's going up. Bullish means up, bearish means down. Bearish means it's going down. Bullish means it's going up. Okay, so this is called a cup and handle. Let me pull up an example for you all. All right, right here. So cup and handle. Cup, handle, get in on the breakout right here, right? Cup, handle. You could have waited till here, you know, as the thing says, as the website says. You could have waited until it broke this 154 to hop in right here on that day, and you could have still caught it all the way to 158 as a day trade. But if you wanted to be more aggressive and more risky, you could have gotten in at the end of this day and got a call. So you swung that overnight, you could have caught this entire move up. Also, this is a cup and handle, but it's also a bull flag in one. So let me pull this trend line up. You could also say this is a bull flag. So let me delete this. All right, so now you see the flagpole, flag, breakout. Here's another one right here. It literally went flagpole, breakout, flagpole, breakout. So here's a whole another one right here. Same exact pattern. Flagpole, flag, breakout. And this was on Friday. So this is today. Today is Monday, August 24th. The market's actually about to open in around 15 minutes. So this is actually kind of live. This is a live. If we go down some more, it doesn't move as much in pre-market, but this is pretty live. And as you go down on the time frames, you can see how this would have looked. All right, so this is the flagpole, the flag. You would have waited till it went all the way down. You see it's right here around your support. It held this support, diagonal support, and you would have just gotten in overnight because you would have gotten in like around here at the end of the day if you would like to. So let's see if I can find any bearish patterns. Do, 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 do. All right, here we go. Another double top. Double tops, double bottoms. That's what I normally trade a lot. So let me take this off. So this was actually, you see it's a double bottom, a bigger double bottom. But if you were trading previous days, let me remove this and this. This is also a double top. So we got went up, went back down, went back up to try to go break through this resistance. It couldn't. What did it do? Dropped. It actually dropped all the way down to here. So up A, B, C, D. You're always going to see those. But this was actually, first it was a double top and then it turned right into a double bottom, So they can do that. Here's another double top. They're just very often. Let me delete this right quick. All right, here we go. A, B, C, D, all the way down to here. These plays can go for days or they can be, overnight. It just depends. But once you see these patterns, you wait until right around here. You wait to here, 146. All right, you see it went all the way up to almost 158. You would want to wait until it passes down here at the 146 if you were bearish. What did I say bearish means? It's going down. So you would wait till it's around here, then you would get in. Caught that whole move overnight. It went all the way to 135-ish. From 146 to 135. That's an $11 move overnight. You know? So these patterns are just some of the things that I trade on our usual. The cup and handle isn't that often. I try to find that one, but it's not really. Let me see if I can find another one. It's not really that often in here. Here goes another double bottom. I mean double top. Double top. Double top. Two in a row. Bull flag. Alright. Flagpole. Bull flag. Breakout. This took a few days, but you have to be patient when you're trading. Um, I don't normally trade like full days like this. I mean, like these amount of days, but like if I see a great setup like this, I missed it. I don't think I didn't trade Square Crash back here in May, but I missed it. But this would have been a great play because it went all the way from 72. This took, let's see, from the time it was about to break out. So 1, 2, 3, 4, 5, 6, 7. 8. We're gonna say right here because it went all the way up to here. So in 8 days, this stock went from 70 all the way to 84. That's a $14 move in 8 days. That could have given you at least $500, minimum. Depending on how heavy you went, that could have went from 500 all the way up to 2,000 and up, depending on how heavy you went in your options trade. So with that being said, you just have to be very observant of these patterns. And yeah, so thank you guys for watching my first video. I'm gonna try to upload content more often. Actually, before I get out, let me show you this crazy one right here. So this is a crazy double bottom. So we went A, B, C. Look how crazy it went. This is a long-term play. People who are watching this, they would have seen that, and right around here, once it broke, hold up. Once it broke here around 59, this happened back in February all the way up until June. So this was a February to June play. People trade like that. I personally don't. I'm going to start trying to get more long-term plays because they just yield way more profit. Look at this. So it went from 32 up, hit back down at 42. So if you were risky, or not even risky, if you were very aggressive, you could have caught it right here. If you were kind of somewhat aggressive, you would have caught it right here. But the safe play would have been to catch it right around here and get like a 2 month out contract, 4 month out contract, and just wait. It went from 59 all the way to 106. 59 to 106. It's almost $100 play. So just be very observant of what you're watching. This is on the 6 month, 4 hour chart, by the way. Let's see how it looked on the daily. Oh yeah, that looked great. That looked really great. And you would have waited for it to break here. Really, you would have waited for it to break like right here. And then you would have went all the way up. So once again, thank you guys for watching my video. Please subscribe, like, comment. I'm gonna try to post more content more often. I'm still learning, so if anyone who's out there that's been doing this longer, if you have any constructive criticism, please don't hesitate. I'm all for it. I want to get better. I want everyone to get better. So I'm just showing people what I know as of right now. I'm still learning. So like as I learn more stuff, I'm going to show everyone else what I'm learning. So once again, just like, subscribe, comment if you can, and thanks for watching.